people have a hard time envisioning that you can, in fact, be under-indebted when we have more debt than we used to have. But we have always been under-indebted. We're just less under-indebted than we used to be 10, 20, 30 years ago. But we're still under-indebted. We're going to have more debt 10, 20, and 30 years from now.
Last week we were startled, and you may have been startled as well, when we had Ken Fisher, as a major money manager on, who argued that, in fact, the problem with the U.S. economy is not that there's too much debt, but too little debt. Mark, what do you think of that?
Well, I think it's a wonderful thought that the U.S. should have more debts, because we have already debt to GDP at 375%, but that excludes all the contingent liabilities that will arise from Medicare and Medicaid that add up to another $59 trillion. So yeah, the U.S. needs a lot more debts, but it will be at the expense of a falling dollar. That should be very clear, and also at the expense of much higher inflation rates in future.
Right, and you were saying earlier, the question is, what do you do with that debt? And then we're not using it for efficient purposes.
Yes,
right?
I mean, I think it's very important to understand, let's say we have two corporations, and I have a large quantity of borrowings, but it's to purchase new equipment and machinery and to train my employees. And you have a factory and you blow all the borrowings away on Porsche cars and Ferraris and golf courses and so forth.
Big houses.
Yeah,
Right?
yes, and big yacht and investments with Madoff and so forth. Yeah. So you understand, the one is in productivity enhancing, the other one isn't. But in general, I would say, if you can go through life with a low level of debt, you are in a much better position to ride out the business fluctuations. The problem is home prices, and every price will always fluctuate on the upside and downside. The key is that when the downside comes, like the Asian crisis in '97, that you don't go bust. Or if you're in shipping, there's a cyclical industry. When the down cycle comes, you have to be well financed. If you own your house and it's 100% fully paid by you and the price drops 50%, it doesn't hurt you. But if it's 100% mortgaged and it drops 20%, you have a problem. And I can show you, in Hong Kong in '97, we had a peak in property prices. Thereafter, property prices dropped 70%, 7-0. Do you know, very few people went bankrupt. None of the property developers went bankrupt because the property companies in Hong Kong, these are family owned. They have their own money on the line. They borrow maybe 20% and 80% is equity. They're very careful.
The opposite, of course, of where we stand here, right?
Yes, okay. Absolutely. That's the difference. The Western world is over-leveraged, has mortgaged its future, and our children will have to pay for that somehow. In Asia and in other emerging markets, we have, in general, very low level of leverage. In other words, most people are cash rich. In Vietnam, there's no mortgage market. People go and buy a house. They deposit the gold on the table or cash.
All right, Mark. Thanks very much.
Thanks.
Yahoo!